So how to prepare the statement of cash flows? Yeah. Unlike the statement of financial position, statement of profit and loss, statement of changes in equity, yeah, we can prepare the statement using our ledgers or trial balance, adjusted trial balance, and then prepare all these documents. You can't do that for your statement of cash flow. Preparation requires information to be compiled concerning the cash inflow and cash outflow of relevant entity over the period covered by the statement. So if you have 1 year period, so you need to determine, you need to classify for the cash, how much is the cash from operation, from investing, from financing, and the detailed classification of that expense. It's not based on the trial balance, yeah, it's not based on the adjusted trial balance. So for cash flow from operating activities, you need to ascertain the net cash flow from operating activity. It is the first step in preparing the statement of cash flow. That will be the first step. Need to determine the net cash flow from operating. So the process used varies according to whether you use direct or indirect method. So if you're using the direct method, then you will have this calculation, these items. You need to determine your cash received from your customer. How much is the cash received from your customer? Okay. Determine the interest received. Determine the cash paid to suppliers, to employees. Determine the interest paid. Yeah. Determine the income tax paid. And you need to summarize your cash flow from operating activities. So this is under direct methods. Yeah. From cash received from customer, interest received, cash paid to supplier, interest paid, income tax paid, and then you can summarize your cash flow from operating activities. Okay. So determine the cash flow from investing activities is different. You need to determine the inflow and outflow relating to the acquisition when you purchase or you dispose, you sell your long-term asset, non-current asset, and other investment that not included in the cash equivalent. For example, your investment in the stock market. You love to invest in the stock market. As I mentioned, when you invest in the stock market, there are uncertainties. There might be possibilities that the stock price will go up and you make more money. There is situation most likely is your stock price will go down and you will lose your investment. So that is not fall under cash equivalent, that is fall under investment. The plan reported in the statement of financial position is the net of accumulated depreciation. Net of accumulated depreciation mean you already subtract the accumulated depreciation from the cost. The net increase in the plan reflect the recording of acquisition, disposal, and depreciation. What does it mean? Previously, you have assets, maybe plant. The value of your plant in year 2020 is 100,000. So this is the net amount, yeah, after deducting the depreciation, accumulated depreciation. However, in this year, 2021, when you check your account, your plant is 130,000. What does it mean? This is the net amount. These changes might be a result from acquisition. You buy a new plant, or you dispose some of the plant, the old one, and also the depreciation of the asset. So the difference here, 30,000 might be because of you buy new assets. Certainly you provide depreciation of the assets, and there are still situations you might dispose your own asset. So this is the comparison that we're going to do in the later sections. Yeah. For your financing, you need to determine the cash flow from financing activity that result in the changes in size and composition of your equity and borrowing. As I mentioned, this is your assets. Your asset is financed by your liability plus your equity. Anything that will increase or change the size, increase your loan, increase your equity, that fall under financing activities. So this is your example of the one question. from the textbook. Yeah, example 17.7. 17.7. I'm showing you the indirect method. This is for Rose Limited. This is for Rose Limited. Statement of profit and loss and other comprehensive income for the year ended 31st December 2022. So we have here revenue, okay, sales revenue, interest income, and also the gain. Yeah. So this is your revenue. This is your revenue. Yeah. Sales revenue 800,000. Your interest income 5,000. Oh, sorry. Your interest income 5,000 and your gain is 4,000. So you total up this 800 plus 500 plus 4,000. So not 400. 800,000 plus 5,000 plus 4,000. That gives you total revenue of 809,000. This is your total revenue. And then your total expenses, you have cost of sales, wages and salaries, depreciation, interest expense, other expenses. Your total expense is 705. So total revenue minus total expenses give you profit before tax. And then you need to pay tax maybe 30% of the amount. So you pay 30,000. So your profit after tax, profit for the year is 74,000. And then you have other comprehensive income, for example, gain on equity investment, 2,000, and then you pay income tax there, yeah, and then income tax there, 600. So your other comprehensive income net of tax is 1,400. So your total comprehensive income for the year is 75,400. So this is information given to you. There are many information here, important information that will help you to determine to prepare your statement of cash flow. This is document number 1. Document number 2, you will be given a comparative statement of financial position. In your final exam, you will be given for 2 years. This year, last year and current year. You are not given the increase or decrease. You have to do it yourself. So they have your cash, account receivable, inventory, prepayment, interest receivable, and all these are current asset. Then we have your plant and equipment. This is your non-current asset, investment, intangible. So these are all your assets. And then below are your liabilities, and also equity, account payable, wages, salaries payable, accrued interest, other expense payable, current tax payable, and then you have deferred tax liability, long-term borrowing. So these are all your liability, and then you have your equity and including your reserve, share capital, retained earning, financial asset, revaluation. So you will be given these 2 documents. The first one is your profit and loss. Second is your statement of financial position, also known as your balance sheet. And then you are given additional information where you need to adjust that figure. So you're given 2 documents plus several adjustments. So additional information given here is plant that had a carrying amount 10,000 was sold for 14,000. The carrying amount, what is carrying amount? Carrying amount is the cost minus accumulated depreciation. So the carrying amount or net book value is 100,000, and then you sell it for cash 14,000. So this you make gain, am I right? Gain of 4,000. When we studied accounting for PPE, okay, you will record that. How you're going to record this? Cash, debit 14,000, am I right? And then you're going to credit your plant 10,000, and then another one is gain 4,000. So this is how you prepare the journal entries. But I'm not going to test you whether you know how to prepare journal entries or not on this topic. And then new equipment purchased for cash amount of 50,000. So you buy new cash, new asset, new equipment for 50,000. So this will be your cash outflow. Yeah, this will be your cash outflow under investing. So intangible asset 50,000 were acquired for cash. Maybe you buy a certain brand, franchise, or whatever. Okay, that is 15,000. A borrowing 10,000 was made during the year and received in cash. You mean you borrow money from the bank, 10,000. So this fall under financing. This fall under financing. And dividend paid in cash were 50,000. So this is also financing. This is outflow. Yeah, outflow means money up. This is money in. This is inflow. I call it inflow. Inflow. So from this information, the statement of profit and loss and other comprehensive income, from a statement of financial position and additional information, you are required to prepare your statement of cash flows. Statement of cash flows. So how are you going to do this? It's very easy. You have to go back to the basic. You have to know how to calculate the cash, for example. Yeah, the cash inflow and the cash outflow. Let us do one by one. The first one I'm going to show you is how to determine cash received from customer. How to determine cash received from your customer. If you look at this information here, you have your sales. This is your sales, 800,000. But you're not sure whether this all 800,000 is a total cash sales or is credit sales. So you don't know. From by 800,000 is your total sales. Does not mean you receive 800,000 in cash. Some of them might 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 be given a credit facility and they can pay for maybe 30 days or 20 days. So all these sales that's not necessarily cash sales. So you have to look at your account receivable. Your account receivable previous year is 70,000. Now your account receivable increased to 79,000. Account receivable is amount of credit sales. Am I right? Yeah, so the balance that increase mean increase in account receivable mean less cash received. Am I right? Less cash received from the 800,000. Okay. So if you are using that formula, even though you receive the 800,000, sorry, even though your sale is 800,000, it does not mean you receive 800,000. Okay. If I'm using the account receivable accounts here, this is your balance 7,000. This is your balance BD. And then we record the sale, assuming that all these are credit sales. So it's going to be debit account receivable credit sales. So I'm going to add this one by 800,000. And at the end of the year, you know that your balance of cash, sorry, the balance of account receivable is 79,000. So this is the difference. This is the difference. Let me repeat again the story. This is your sales. Okay, so you assume that all this is credit sales. This is credit sales. So the transaction will be debit account receivable, debit 800,000, and you're going to credit your sales account 800,000. So if you use your account receivable, so you debit your account receivable 800,000. So now your total account receivable is 870. But at the end of the year, when you check your trial balance, you see that the amount of your account receivable is only 79,000. So it should be 870. How can your amount reduce? Mean you receive the cash. So this is your cash received from your customer. Yeah, 791 I love to open the T accounts, but some of you, they might want to they might want to memorize the formula. What is your sales? Your receipt from customer is going to be sale plus the beginning minus the closing. So this give you 791,000. So this will be your first element in your cash flow from operations. From operations, yeah? From operations. So what's the formula? If you want to memorize this, no problem. Sales, this is current year sales, plus beginning operating account receivable. This is your AR, BD, then you minus carry down for your AR. So this give you receipt from your customer. So this is the number, the magic number, yeah, that you need to complete your statement of cash flow. All this is only for one item. This is for one item.